Alrighty, yeah, my name's Jeff Guillory. I'm a tax preparer here at ABDC here in Anchorage. We're the folks who go out to a lot of mini villages to do tax prep for mini villagers and commercial fishers. So we get going with the commercial fishing, a little bit of tax tips, what to expend, and we'll go over the 1099s and 1096 here later on. So, and our office actually, if you guys want to need assistance filling out those 1099s and the 1096 and where to send it, we do all that service for you guys if you wish. We'll fill the form out with all your crew pay and everything that you need, and we'll get it all shipped off to the IRS for you if you wish. So that's a service we'll provide, and let's go down to the required requirements for from the IRS for commercial fishermen. You must file your 1040, report all your income on the Schedule C for a sole proprietor. If you're just fishing for yourself, Schedule C will do it. There's no special forms from the IRS to fill out except for that one. You do got to pay self-employment taxes, of course, and make quarterly estimated tax payments if you need to. Usually those are not required unless your tax bill at the end of the year when you file is $1,000 or more. Then they're going to want you to send estimated payments in. If not, then they can actually send you penalty notices for not filing estimated tax payments. So the penalties can get quite large, several $1,000s. Depends on the size of your tax bill. So, and
You've got a question, Jeff, if you don't mind if we interrupt you every once in a while.
Yeah, that's fine.
Yeah, Jeff, Fritz Johnson here. I'm curious about the quarterly estimated tax payments because
okay.
If your tax bill is more than 1,000.
Yeah, when you file your tax return and your tax bill when you file your 1040 is $1,000 or more, you're required to send in estimated tax payments. If you didn't, then they will send you a penalty for not filing estimated tax payments.
I'm familiar with those. And typically, what are they based that on? Like, say your tax bill's $5,000. Is there some formula they use to calculate that?
They are using a formula. It can be, let me look here. It's a weird formula. Every tax penalty has a crazy formula, and the failure to file penalty is 5%. The pay penalty is 0.5% of your bill. And let's see. So the estimated tax penalty is something they just started sending out again. They suspended it for like 3 years because of COVID, and now we're starting to see them. And I think it's 5% of what you owe. And it can't be more than 25% of your tax, however. So about 5% of what you owe per month is what they'll do. And it can be quite high. And there's also some, the failure to file penalty can't be more than 435. There's some max in there, max penalties. So it won't get too high. So they won't really cripple you, but it will still calculate and get high taxes from failure not making those estimated payments.
In my case, if somebody like me who doesn't do their taxes till after the first of the year, and you really don't know what the bill's going to be at that point.
So for you,
keep up with it during the season, basically.
Yeah, so you can try to keep up with it, or you can get your taxes filed by March 1st and everything paid by March 1st, and you can avoid all those penalties. And that's a commercial fisherman thing only. If you make 2/3 of your income from commercial fishing, you can file by March 1st and pay your tax by March 1st, and they will not add penalties.
Oh.
That's the way the IRS gets out of that, because they know the fishing's, one good year, one bad year, or it's very inconsistent. So they give you a March 1st deadline, to file and pay everything without penalty.
Great, thank you.
All righty.
Question, so the quarterly tax payment Form ES, does that need to be completed? Even you do,
Did you
Sorry,
hear
say
the
it.
question, Jeff?
I did not.
So she was asking if the quarterly, the Form ES has to be filled out if you do a payment plan. Is that it?
yeah.
Well, usually the payment plans are for prior taxes, the payment plans. You know what I mean? So you don't really go on a payment plan for estimated taxes. Payment plans are for old taxes from prior years. And if you're on a payment plan and you got to do both if you're on a payment plan.
Thank you.
Okay. All righty. So IRS code indicates that all income that you receive, no matter, regardless if you get a 1099 received, must be reported to the IRS. And all your income the fishing income should flow through this on the report on the Schedule C, and it will flow through the 1040 on the other income line. Business expenses, cost of carrying on the business, anything that you spend on getting your operations going ready. Every dollar is a deductible expense. They must be ordinary and necessary for the business industry you're in, and that can be a wide ranging. You know, you can justify a lot of things in your business to get everything ready for fishing. So anything that you do to get your vessel ready, yourself ready, your anything is a good business expense and should be reported on the Schedule C. The IRS doesn't like you leaving expenses off. You're supposed to report all income and proper expenses to properly report your Schedule C, your business income.
Another question here, Jeff.
Go ahead.
At what point do they decide that it's just a hobby? If you have like a couple of crappy years.
So yeah, so two out of five, it's really weird, the IRS. 2 out of 5 years, you must have a profit, a net profit. Otherwise, they may consider it a hobby. However, we have not seen them do this or how they do it or what, what they do to go asking you about it. But if they do declare your business a hobby, then you have to report the income and they won't accept any of your expenses on hobbies. But I don't think in the fishing industry, I don't think you guys have anything to worry about with that. Because if you're out there trying to seriously fish and you got more expenses than income for 3-4 straight years, I don't think they're going to bother you guys. We've never seen it. So it's a rule that's very rarely used by the IRS, it appears. So
I have one more. I'm assuming you're giving us information that will help us minimize our tax bill.
correct.
If you have
Correct.
but if you show a profit of like $100,
Mhm.
years in a row because you helped us accomplish this, is there some threshold there where they'd say $100, and you've got $300,000 invested in your boat, your permit, or whatever?
Mhm.
Would they look at it in that way?
Nope. They're gonna look at your Schedule C, and if everything looks appropriate in income and expenses, they'll allow it to go.
They can't tell you how to run your business. I mean,
Yeah.
so, that's what all the big companies do is they write it off so they don't show any profit.
Yeah, some big corporations haven't shown a profit in years. They're just a segment of another corporation, so.
I have a question on deductions when it comes to like your home, say maybe you do meal prep in your kitchen and you make a bunch of meals for the boat during the summertime, and you hang your nets in your garage and you store all your parts and supplies in your basement. Like what of my home expenses can I deduct from a commercial fishing operations?
So the home expense is the same for everybody. If you, the area of the room has to be used for that specific business, uh, strictly just for that specific business. You know what I mean? So if you're using your entire basement to store fishing equipment and gear and nothing else, then you can use that square footage as a business expense. But the IRS wants like if you have an office you're using just for getting your business ready for fishing, that would be a qualified expense, and you can use a home expense there. But if you're sharing it with a bunch of other stuff like your kitchen, they will not allow that. You know, your common kitchen and you're preparing food, you know, all your food expenses, yes, definitely an expense, but the home office expense, they won't allow that like that. They're very strict on that one.
Okay.
Okay. So, yep, anything else?
What about big things like a truck?
Yep, the big vehicles, anything you're going to use for more than a year, you can capitalize on the tax return. That means we'll start a depreciation worksheet and you'll recover that cost over a period of time. For a vehicle, it's probably 5 to 7 years. So you'll spread that cost. Anything that's used, including all your vessels and your motors, should be capitalized, and you can cost recovery that item over a course of 5 to 7 years usually.
Thank
So
you.
yeah, and there are ways to 197 or get more if you want to reduce. If you have a tax bill and you have some items you're depreciating, you can section 197. A couple of things you can do to add more depreciation for a specific item, but it's just going to reduce it for future use. But you can reduce a tax bill in the current year with those options. So, righty.
I have a question.
Yes, ma'am.
So for someone who has just one vehicle, you know, we use it for normal everyday work, you know, normal stuff. And then maybe 2 years out of the year during the fish, maybe 3 months out of the year it's used for 90% or to be used for fishing hops and, you know, going in and changing nets and whatnot. Can we deduct 3 months or? How
Yeah, if you're using your vehicle to do that type of stuff, you can get the mileage and complete the mileage, but if you're using it 20% for business, then we can do 20% of the expenses on it. You know what I mean? So if you're using it 20% business time, then we can expense 20% of either your fuel costs or your mileage and some other expenses. The mileage expense covers a lot of details on your vehicle, the maintenance and the gas and everything. So they won't let you take both, but most preparers check it both ways if you have the data to figure it out both ways. What's the best deduction for you? But yeah, I would keep track of all your miles if you're loading your truck up for fishing and getting it all to the docks and everything. Definitely keep track of all your mileage. And
much per mile is it deductible?
I think it's up to 67.5 cents a mile now. It's very high. It's a very good deduction. It's
If I have a fish truck and I use it in the summer to haul gear and stuff, but most of the time it's parked, so.
that sounds like a more of a business vehicle itself. What you're doing, yeah. If you're using it mostly for fishing, and you can probably, yeah.
Mileage stuff on that.
Yeah, mileage, if you don't want to collect the mileage, just keep all the expenses that when you fill it up for moving your gas equipment or your fishing equipment around. Keep all the receipts, all your maintenance if you're using it. You know, it sounds like you're using it a lot, mostly for business use. So you can
It's parked most of the time.
yeah. So yeah, I would track it all and always hand all that stuff over to your tax preparer, and they'll figure it out for you, let you know what's good and not. But anything associated with business, I would always suggest keep track of it. And you turn everything over to your preparers. And they'll figure out what's a good expense and what's not qualified. So
You have a question from online.
Hi, Drew speaking. So my tax person said that I couldn't deduct food. But I travel for fishing. Is that true?
if you're traveling, do you earn most of your money from fishing?
Yes.
And you're traveling away from home, and so are you purchasing large amounts of food for the boat while you're out in the water to feed people?
That, but also for the place that I stay also.
So if you got qualified traveling expenses, your traveling, your food, and your tolls or taxi cab, all that stuff should be a good deductible expense. It's just she's trying to determine your tax home. If you make most of your fishing at your tax home, then she won't deduct some of your expenses, and maybe that's what she's getting at with your food.
Okay.
Yeah,
Yeah, because I've heard that before, and then I had other fishermen tell me that no, they should be deducting the food. So I was just confused on.
Yeah, I think she's trying to determine if you're making 2/3 of your money fishing and you fly to that area, she may have determined that's your tax home, and you couldn't qualify for travel expenses. That's
Oh,
what she
okay.
might be doing. So, right. All right, so yeah, for deductions fully deducted using that year, examples, bait insurance, your contract labor, your interest on any loans is deductible on the taxes. The loans itself, loan payments itself are not deductible on the tax return. That's a big confusing thing there. It's in your business books, but your business books net profit usually does not match what's the net profit on your tax return. It's usually less on your tax return. So meal expense, groceries, meals deductible when you're away from your tax home. Your trip is overnight long enough where you need sleep, rest from your duties, and you need food. Those would be deductible. The meal thing, it's always, they change it all the time. Mostly for the big CEOs, they take full advantage of these things and really abuse the system on that. So and you can only take 50% of the meals. We'll punch in 100%, and IRS it's always reduced by 50%. I guess they assume you have to eat still, no matter if you're working or not. So let's see. And then the capital expenses. This is all the expenses, vehicles, vessels, anything that's used more than 1 year. You should capitalize and recover those costs over a period of 3, 5, 7 years, whatever the item is. And there's a lot of things you can capitalize. Personal expenses not deductible. Your housing, your personal utilities, unless you actually have a qualified home office, that percentage of utilities may be deductible. Commuting to tax home or place of business, none of that is just considered commuter cost. Obviously, tobacco products not deductible, even though it may be ordinary for a lot of fishermen, but they just no tobacco products at all on the tax return.
Also, that would include like Copenhagen I bought for crew.
Yes, sir. Yes, sir. None of that is tax deductible. So I know it's very ordinary, but it just won't be deducted. Yes, ma'am.
Liz, yeah, he can see you.
Okay, you're saying that the home what does it say? I think it was the, screen before this. Okay,
I'm on the SE form.
the home improvement, okay, step away from fishing, taxes.
Uh-huh.
What, aren't the home improvement deductible personal taxes?
No, no, if you're doing home improvements just to improve your home, you can go to your mortgage, your company, or a real estate company. It gets added on to your basis to your home. They may tax you more for that if you pay property taxes, but none of that's tax deductible for improvements unless you're doing medical improvements for a wheelchair accessible person, something like that. Those are completely deductible. But regular improvements are not tax deductible, but you know, your home interest and your property taxes are fully deductible if you Schedule A or itemize your deductions.
Property tax deductible. Did you say property tax deductible?
Yeah, property taxes are totally deductible on taxes if you itemize your deductions.
You got on, I was once upon a time told, property tax is not deductible.
Yep, if you itemize, the problem is in 2018 they changed the law. Your standard deduction's been doubled, so your itemized deductions had to be more than your standard deduction for it to be beneficial. And if you're a married person now, your standard deduction is almost $30,000 or just over. So your itemized deductions, which include medical and property taxes and mortgage interest, would need to be that high for it to be beneficial for your taxes.
I have one question also.
Uh-huh.
I just saw that we have jumped over crew member meals. I know myself and at least one other person here was wondering about those crew member meals. Do you mind just covering that slide real quick?
The crew member meals.
Up to?
Must be a
Slide number
couple more.
7.
There we go. Crew member meals, yeah. So yeah, so if your captain has you, if he's taking money out to help pay for your food, then the crew member should be able to take that deduction on their tax return. You know, you understanding what I'm saying there? So if it's added into your income or if it's deducted from your income, then yeah, the crew member will take the deduction since he's passing off the cost to you.
Yep. Copy. Thank you.
Yeah, definitely. That's a big one. That's crew members can't take a ton of expenses. You know, they may buy some cold weather gear, and it depends how they're paid by the captain, you know. So a lot of the expenses are already taken out before they give them the pay at the end. So it's a percentage of the boat share. So the SE, the Form SE is self-employment tax. It's about 16–17% of self-employment tax to self-employed folks. You got to pay the Medicare and Social Security taxes, both sides of it. When you're a W-2 employee, you pay half of it. Your employer pays the other half. But when you're self-employed, you're going to pay both sides of that tax. And it's calculated totally different from your income tax. So you'll get an income tax and a self-employment tax, and then they're added together on the 1040. So self-employment taxes get kind of high along with your regular income tax. So estimated tax payments, quarterly payments. The best thing to do is to, you know, if you think you're going to owe more than $1,000, try to get some payments in every quarter. 15th day at the end of each quarter is when they're due. Looks like, let's see, avoid estimated tax penalties. File your return and pay the entire tax by March 1st. You can avoid all penalties if you do that. It generally applies if fishing income is 2/3 of your total income. Or you can make one big estimated tax payment by January 15th. We're already beyond that. So that's too late to do that. But you can make one big tax payment by January 15th and to avoid some penalties. See. Right, if you don't file your return by the due dates, if you have a tax due, usually the due date's April 15th. And if you have a tax due, the payment, the taxes actually due that day also. You may file an extension to October and file in October, but if you have a balance due, they're gonna go back all the way to April to start penalizing you, because the tax is actually due on April 15th. If you think you're gonna owe, you can get your tax prepared to run your numbers in April and try to get some, some payment into the IRS on April 15th. You got to get it to 90% of your tax for it to be penalty free. But most tax preparers, CPAs know how to calculate that. They'll run your numbers and try to get you to make a tax payment if you're going to file an extension. The interest accrues, the interest never stops. That's statutory. You can't even get rid of that. There's ways to get rid. If you got penalties and you've been paying on time over the years, there's ways to get rid of. You can abate some of your penalties, but they'll never abate the interest. That's statutory, and it's running about 7 to 8% right now. The interest rate for the IRS. Extensions, yeah, the extensions are it's just an extension to file. There's no extension to pay. Very, very rare circumstances. If you have a life-altering change, something happened in your life, then we can call up the IRS. And there is a way to actually extend a pay, but it's got to be a very good reason. So.
Do you see the question in the chat, Jeff?
Yeah, go ahead.
If a fisher has non-fishing employment during the year and taxes are being deducted, will the IRS consider those taxes to be part of that quarterly payment of income taxes due?
No, I don't think they will. No, they will not consider that. If you still owe over $1,000, they're still gonna hit you with the self-employment penalties. Is that what you're asking? If the W-2 tax is going in? Hopefully, a lot of people, that's what we encourage people. If you got a W-2 job also is to up your taxes on that job, because they send it in automatically to try to help reduce your fishing tax at the end of the day, to avoid some more of those penalties. Let me see.
Jeffrey, I have a question from online.
Yes, sir.
Kind of related to that last one, when you talked about if your fishing income is 2/3 of your income, can you maybe elaborate on more if you have I hate to use the term real job, but a non-fishing job, your fishing pay, there's gross and there's net. So do you know where like that 2/3, how that's calculated versus on gross versus net?
It's all on the net. They're gonna go off your 1040 filing.
Okay.
And check your income. That's how they're gonna do that.
Thank you.
Yeah, definitely. So, okay, so let's move on. IRS notices. So here's a big problem with a lot of people. IRS notices. They're scary for a lot of people. They just throw them. I had one lady told me she just stacked them underneath her bed for a bunch of years. You must open those immediately, especially self-employed folks. Read the notice, respond to it, and if you don't like if you don't like what you're seeing, send it to us and we'll help you respond to it. But there's due dates. They usually give you 30, 60 days to respond. The best thing to do is respond to that notice. Give them a call. It may take 2 or 3 hours to get them on the phone. And if you ain't got the time to do that, just give us a call. We'll sit here and wait for 2 or 3 hours for an IRS agent to pick up the phone. So we don't have a problem doing it, and we get decent results some days. IRS is serious lacking employees and knowledgeable employees right now. They're trying to fill the ranks up, but the training seems to be a little off or a little slow. So it's very tough trying to get stuff done with the IRS sometimes. Let me see. Did I skip something? All right, Form 1099s. These 1099s, if you pay somebody $600 or more, you should issue a 1099. If it's under 600, you don't have to. That recipient still has to report the income. But yeah, you should fill out 1099s, issue them to your crew, and send them to the IRS. Now, the 1099s ain't that hard. It's just you need to figure out how you paid your crew and which form to use. If someone's not an employee, box 7, of the 1099 MISC or the 1099, actually box 7 is no more. They got rid of that one. So it's box 5 of the 1099 MISC, the fishing boat proceeds is what you guys will probably use. You could use box 1 of the NEC if you pay them by any other means than the percentage of fish. But we'll go over this a little bit later. I got some couple of screenshots actually of the 1099s. So the 1099s, let me go to it here. Here's the MISC, and the box 5 fishing boat proceeds is where you're going to want to put the money in. Right up here is all your information, your name, address, your TIN number, which is your social security number unless you have an employer ID number, and then the recipient's social security number. This is mandatory. You're going to need to call them up and get their social security number. If you don't get their social security number, you're supposed to withhold 24% for taxes and send that in to the IRS. So I would highly suggest to get that social security number, their name and address, and the amount of money they made right here. These 1099 forms come in triplicate, I believe it is. Actually, there's 4 copies to them now. Actually, maybe 5 copies to them now. But you can't download these off the internet. There's specific paper for scanning. They won't even accept them if you download them off the internet and send them in to them. But we have hundreds of these things. We just got the new shipment in. So if you guys want any, I can send you a ton of them, or we can even fill these out for you over the phone if we got the proper information.
Also, I'll just advertise BBDC has a bunch here.
Good. So, and if you need help filling them out, I got 3 guys here that'll help you fill them out. Here's the NEC, the non-employee compensations. This is the one they added about 3 years ago, brand new. This is mostly for other types of contractors, but a lot of commercial fishermen are still issuing this one to their crew members, some of them. So it's almost the same.
Is this something like if you had a $5,000 bill from, I don't know, the fiberglass shop or someplace? You're supposed to give those guys one of these?
No, wait, say that again?
I guess say I had fiberglass work done and I spent, more than $600. Do I have to give one of these to kinds of vendors?
If you got a contractor doing it, yes. Your vendors, technically, there's really weird rules on business to business, and I'm assuming they would consider you business to business, and you don't have to issue those because the business should be accounting for their own income. Mainly it's for contractors. What's that?
What makes for a contractor?
Somebody that you just give him a job to do, and you have no control over when he does it, how he does it, and in what time frame he does it. That's a contractor. If you tell him you want it done immediately and you got to stay here 8 to 5 Monday through Friday, that's a W-2 employee. So if you're just given, you get a contract with somebody to get a job done over a period of time without too much control over that guy, that's a contractor. So yeah. They got
So contract, you have to have a contract then to do 1099?
say that again.
Contract, no. Like it,
You say, do you need a contract?
No, nope. You don't need contracts in the business industry. A verbal contract is a binding contract for most business transactions, so you don't need anything on paper truly. But businesses will, you know, they'll give you an invoice, or before you do a job, they'll give you some documents explaining what you want and what you agreed to. So if you want to do that, that's totally fine, but you know, verbal agreements is binding. You know, so you can just do verbal agreements if you wish. Alrighty.
Okay, here's another one.
Mhm.
My truck needs work, you know, I deliver it to, you know, a mechanic and say, I don't know, you know, it needs a universal and it needs like greasing or something. Is that a contract?
No, I mean, it's not really a contract. You're just, you know, I'm assuming it'd be just like any of us dropping our vehicles off at the mechanic.
Right.
Yeah,
It's kind of a
so.
verbal agreement. I take it.
Yeah, it's kind of agreement, yeah. And most places will honor what you guys talked about, so, you know, every time I drop my vehicle off, they always call me if they want to do extra work, and I give them the verbal okay, so, and that's
You need to
pretty
give
much
them
good to
an
go.
NEC.
What's that?
Say you spend $1,000 in circumstances like that, you have to send them one of these NECs?
No, nope, if it's on your business truck, that'd be just an expense on there, and I don't think you would need to send a 1099 to those folks.
Similarly, if I make a deal with a mechanic here in Dillingham and he charges me, you know, $1,000, same deal as the truck?
What now?
If I spend more than $1,000 with a mechanic here or $600 with a mechanic in town to fix something on my boat, and am I supposed to give him also one of these 1099s, NECs? Or is that the same as my truck?
No, I don't think you would have to. I don't think the IRS would bother with you on that. As long as you can prove that expense when you put it on your Schedule C, I think you'll be fine. I think it's more of guys directly working under you for your industry that you're doing.
Okay.
Is for the 1099. I know it's confusing, but they got weird rules on who should get 1099s, and I can look it up. I can do some more research on it. It's just I'm trying to stick to the fishing
So,
captains and crew members here.
the 1099 NEC, so it's 600 or more, right?
Yes, ma'am.
Okay, so there's a mechanic that works, you know, in Dillingham. And a lot of times the work is done by his business, you know, and it's more than 600. NEC 1099 can be completed
Yes.
to that vendor,
Which one?
to a vendor, you know, somebody who has a little shop doing, welding or.
I think there might be a confusion over deductions on money that you're spending on your business or on your truck or whatever versus the 1099s, which would be for your basically employee
Yeah.
hiring, but they're independent contractors for the fishing business.
Uh-huh.
So I think, Jeffrey, correct me if I'm wrong, but those would be deductions that you would be claiming, not 1099s that you're giving or exchange.
Correct.
Okay.
Yeah, exactly. Yeah, so there are rules about business to business 1099s, you know, businesses doing work for other businesses, but they don't have to issue each other 1099s because of their business records that they keep, and they can prove all that in their record keeping. So it's mainly for individuals that you're contracting to do the work, like your crew members. So see, 1099s, 1096. Let's go to 1096. So the 1096 is the form you got, the transmittal form or the cover page, I like to call it, for the 1099s. If you send in, if you have 1099 NECs and 1099 MISCs, then you have to send in two different 1096s. You don't want to commingle those, you want to separate them. So if you send in the MISC, add up all the money, it's all, most of it's self-explanatory, filer's name, address, this is all you, the payer, name of the person to contact, which would be you, your phone number, your fax number, if you have one, or email address. Those are optional. Your social security number is your employer ID number, unless you have an actual employer ID number. You can use your social security number for that. Leave the other one blank. Total number of forms you're sending in and the total amount of money you're sending in on those forms. And then check the box of which form you're sending. You can see there's a couple of dozen of them options. And the mailing address, there's, if you have the 1096s there, you should see the mailing addresses form. If you're sending in less than 10, they don't mind you mailing them in. If you issue 10 or more, you're supposed to send it through their new portal. I forgot what it's called, but I don't think they're penalizing anybody yet if they don't use, except for the big corporations, that's mandatory for them. But this is also something you can call the office. We can set you up, getting these filled out. And it's the paper, it has to be this specific paper. It's a scanned paper, and you can't just print it off the internet on your regular computer. They won't accept it. So these forms, I guess these are pretty important. We get a lot of clients who don't get 1099s, and we never hear of anything, or a lot of captains that haven't done it yet, or they're way late. We don't hear of them getting any penalties, or they don't call us back saying the IRS has sent a nasty letter to them. So I don't know how, it doesn't appear they're too strict on enforcing the rules on these, but it looks like they may be changing that soon, because they're sending out a bunch of rules to us about these things. So the due dates for the 1099s, January 31st, should be in the mail by the end of the month. The last copy B and copy 2, there's like 5 copies in there. It says right on there which ones to give to your crew members. And they're due to the IRS by the end of February. And do not separate the 1099s. You'll see them, there's two MISC on each page and 3 NECs on each page. Don't cut them up. If you don't use them all, just send it in blank like it is, the other ones. And keep a copy of all those for your records. And you can't go wrong. The IRS you never know when they're going to call and ask you for your records. I would keep it 4 or 5 years at least, just to be sure from the IRS. I think they tell us 3 years, and but most CPAs I know keep it for many more years. So, and yeah, the IRS Resource Center, irs.gov, the Fish Tax Center is a great resource to use. They got all the information right there in all these publications. And so those are great resources. Or you can call our office right here in Anchorage, 5620335. There's 3 of us here that's been here for a while to help you get these forms completed and sent to the IRS. And yeah, we don't mind helping. We do it all the time. So, is there any questions?
Yeah, hi Jeff, I have a question.
Sure.
So I know some captains, they give an option to their crew and on whether they want to give them a 1099 or not. Who does that benefit, and how does the captain absorb that by not, if the crew member says they don't want a 1099?
So if, technically it's not a choice. If it's 600 or more, he's supposed to send out the 1099. And I guess I'm not exactly what you're trying to say. The crew.
If the captain doesn't give the crew member a 1099, how does that captain absorb that? Or
Well, the captain can still report, whatever he paid them, it's a proper expense on his Schedule C, and if the IRS, complains that he didn't send a 1099, I've never heard of somebody not, I guess he can say the crew member or the contractor refused to take the 1099. But as long as he tries, the captain tries to does his part, I believe he relieves himself of liability from the IRS. At least he's trying.
Okay,
You know what I mean? So.
Yeah.
Yeah.
Hold back 24% in that instance, if they, same thing like if they have a social security number on the 10.
Yeah. So, yeah, if you don't get their social security number, you're supposed to withhold 24% minimum, that's the number, 24% in taxes. And the only way for that contractor, that crew member to get that 24% back is to file a tax return with his social security number and but there is fines if you send in 1099s to the IRS with no social security number and no withholdings, the IRS can fine you, the payer, for not withholding that 24%. So there's a big case in that business didn't do that, and they fine him hundreds of thousands of dollars, and he's taking it to the federal courts now outside the IRS system. So they will issue fines if they wish.
What if a guy gave you a bogus social security number and you jumped through all the hoops and and you did everything you're supposed to do, and then they come back, and this happened with my nephew, because I don't know, the handwriting was a little off, and the IRS couldn't read it on that summary form. So they tracked me down, and I had to call my brother and, get his son's actual number so they could read it. But what if a guy just gave you a made-up number? Would you still be liable for that?
No, because you're not a W-2 employer. W-2 employers have to have employees fill out I believe it's the I-9 to confirm their social security number status and make sure it's a legit number and it matches that person. For the contractors, you don't have to do that. You may get a bogus number, and I don't think they'll hold you liable for that bogus number. Anything else?
I'm not seeing any other questions. Thank you, Jeff. I appreciate you taking the time for all this.